So my name is Shanesh, guest lecturer of Government First Grade College Kurgod. Today I would like to teach subject corporate accounting and a chapter number 5th profit prior and after incorporation of a companies. So here now I would like to solve the problem of profit prior to incorporation with solution. Let us see problem or question. M Company Limited was incorporated on 1/6/2016 to take over the business of Basava as a going concern as from 1/4/2016. The statement profit and loss of the company for the year ending 31/3/2017 was as follows. Particulars note amount total. You have to take first one continuing operations, first one revenue from operations, sales, note number 1 total 4 lakh. So next two other income, note number 2. So no, total column nil. So total 4 lakh. Total revenue A total revenue 4 lakh. So third one expenses A cost of sales, note number 3. So direct total column 3 lakh. B employees benefit cost, note number 4. Under salaries and allowances 30,000 amount column, director fees 15,000 amount column, total salaries and allowances, employees benefit cost 31,500. Next C finance cost, note number 5. Interest on debentures 700 amount column, interest to vendors up to 30/9/2016 3,000. So total 3,700. So finance cost, depreciation and amortization, note number 6 and 1,200 total column. Next E other expenses, note number 7. Rent and taxes 11,500. Selling expenses 2,000. Discount on sales 500. Audit fees 2,250. Formation expenses 900. Miscellaneous expenses 750. So total, these are all above, add it and take it out column or total column 17,900. Total profit A minus B, so 3,54,300. So the total expenses 3,54,300. So profit A minus B 45,700. So next adjustment, the following further information is available. First, rent was paid at rupees 500 per month up to 1/8/2016, and thereafter it was increased to rupees 1,000 per month. Next, B average monthly sales for the first 4 months during the year was rupees 30,000, whereas the average monthly sales for the subsequent period was rupees 35,000. Prepare the statement showing profit prior to incorporation of the company. Now solution, calculation of time ratio. So I have to take calculation of time ratio prior incorporation period, prior incorporation. So next company purchased 1/4/2016 and the incorporated period is 1/8/2016. So I have to take first company purchased 1/4/2016. So incorporated is small corrected here. So this date is changed 1/6, small corrected every students. So here small corrected, so 1/8/2016 you have to corrected. So you have to small date is change. So from company purchase date is 1/4/2016 and incorporated date is 1/8/2016. There are 4 months. So April, May, June, July. So there are 4 months. August will be started already. So there are 4 months prior incorporation period. Next, after incorporation period, company incorporated on 1/8/2016 and the accounts are closed on 31/3/2017. So August, September, October, November, December, January, February, March. There are 8 months. You have to take 8 months. So 4 months is to 8 months. So prior incorporation period 4 months. After incorporation period 8 months. So ratio is 1:2 ratio. So 4 1 ja 4 2 ja. Next, second one, actual period ratio. You have to calculate the actual period ratio for interest. So prior incorporation period 1/4/2016, purchasing date is 1/4/2016 to incorporated date is 1/8/2016. There are 4 months. After incorporation, company was incorporated on 1/8/2016 and the date of payment of interest was rupees 39/2016. There are given problem. So in the interest to vendors. So this date will take here the actual period ratio while calculating. So 31/3/2017. So you have to take year. So 39/2016. So there are 2 months means, yeah, 8 9. So 10 already started. So 2 months. There are 2 months. So 4:4 months is to 2 months. So there are ratio is 2:1. Prior incorporation period 2:2 2:, so actual period ratio, so 2:1. Now, 3, calculation of sales ratio. You have to take prior to incorporation period for 4 months. So average monthly sales into 4 months. So you have to take average monthly sales is 30,000. So you have to take 30,000. Average monthly sales is 30,000. 30,000. They are already given in the problem. So next, average monthly sales in prior incorporation period ante. They are already told, they are already adjustment given. Prior incorporation period average monthly sales is first 4 months. So I have to take 30,000 into 4 months, 1,20,000. So average month after prior incorporation period, after incorporation period 8 months, average monthly sales for next 8 months. So 35,000 they are already given in the problem. So into 8 months, so I have to take 2,80,000. Now, so 1,20,000 prior incorporation period. After incorporation period, total 2,80,000. So now ratio is 3:7. So next, distribution of rent prior to incorporation for 4 months, 500 into 4. So you have to take 500 into 4. The rent was rupees 500 per month up to 1/8/2016. So 500, so into 4, 2,000. After incorporation period 8 months, 1,000 into, so 1,000 into 8, so 8,000. Total, so 10,000. Total rent and rates 11,500. So 11,500 less paid rent. So in this 10,000 less paid rent 10,000, remaining rates is 1,500. You have to distribute it. This is sales ratio. Next, statement of profit and loss account. Continuing operations, revenue from operations, sales. You have to take sales as usual, 1,20,000, 2,80,000 according to given ratios. So next, total revenue 1,20,000 prior incorporation period and after incorporation period 2,80,000. Expenses, A, cost of sales ratio 3:7. So 3 lakh is there, 90,000, 2 lakh, 10,000. Next, B, cost employees benefit cost, salaries and allowances time ratio 1:2, 30,000 is there, 10,000 and 20,000. Director fees after incorporation 1,500 is there, prior incorporation nil, after incorporation period 1,500. Next, finance cost, interest on debentures after incorporation period, director in prior incorporation nil and after incorporation period 700. Interest to vendors, actual period ratio 2:1 ratio. So you have to calculate it here 2:1 ratio. So this is the interest to actually this, so 2:1 ratio. So you have to take 2:1 ratio. So there are 3,000. There is a amount to interest to vendors amount is 3,000 to 2,000, 1,000 after incorporation period. Next, depreciation. So depreciation time ratio. So you have to take 1,000 is there, 1,200 is there, 400 and 800 after incorporation period. Rent actual given means, so your rent actual given. So prior incorporation period 2,000, after incorporation period 8,000. So rent is 2,000, 8,000. You have to calculate it actual given in the adjustment 2,000, 8,000. We have to calculate it above. Next, taxes also time ratio. So time ratio 1:2. So 1,500 is available. So here he calculated here 1,500. This amount distributed among the shareholders on the basis of time. So 1,500. so 1000. Next, selling expenses, total selling expense sales ratio 3 is to 7. So 2000 is there, 600. So next 1400. Next, discount on sales, sales ratio, total 3 is to 7 ratio. So here 500 is there. So you have to 3 150. So here 350. Audit fees, there are distributed time ratio, so I have to 1 is to 2 ratio. So 2250 is the total. 750 plus 750 in prior incorporation, after incorporation 1500. Formation expenses after incorporation period, prior incorporation nil, after incorporation period 900 take directly. Miscellaneous expenses, time ratio 1 is to 2 ratio. So total 750 is there. So you have to take 250 prior incorporation period, after incorporation period 500. Total expenses of B 1,06,650 prior incorporation period, after incorporation period total 2,47,650. So I have now profit A minus B. So A minus B 13,000, A minus B. So 1,20,000 in this amount, 1,20,000 minus 1,06,650, 13,350 is the prior incorporation profit. After incorporation profit, so 2,80,000 minus 2,40,000, 47,650. So I have to take 32,350 is the after incorporation profit. So this is the problem of profit prior to incorporation period. So in the given in the adjustment rent. Thank you.